Hey guys, my name is Brennan. I was assigned to work out the Chapter 4 Exercise 5 problem for our homework this week. So I'll go ahead and share my screen and we can get started on it. Um, let's see. So the exercise says, in its first year of operations, Blossom Company recognized $31,700 in service revenue. 6,700 of it was on account and still outstanding at the end of the year. The remaining 25,000 was received in cash from customers. The company incurred operating expenses of $16,400. Of these expenses, 12,220 were paid in cash. 4,180 was still owed on account at the end of the year. In addition, Blossom prepaid $2,390 for insurance coverage that was not used until the second year of operations. So there's a few keywords in here that we need to understand first before we can get started on the problem. First and foremost, accrual basis is when the company records its revenues and its liabilities right, even before they happen. So if they have like an account receivable, they don't wait until they receive the money. They just go ahead and record it right then. Or if they know they're going to have a liability coming up, they go ahead and record it right then, and they just stay on top of it that way. As opposed to cash, they don't. The companies that use the cash basis, they just record the revenues and the liabilities as they come. So they don't record a liability until after they pay the cash, or they don't record a service revenue until they've received the cash. They don't do any of that until it's already taken place. So now we've reviewed that, we can go ahead and get started on the problem. So the problem asks, let's see, us to find the cash basis and the accrual basis. I guess the amounts are already right there. But we'll go ahead and start with part B. It says, which basis of accounting, cash or accrual, provides more useful information for decision makers? So the right answer is accrual basis, and the reason being is because people that are looking at company statements are going to want to know what the company's worth or what the company can do, not what they have in their hands right then, because there's going to be plenty of companies that have plenty of accounts receivable or things that they haven't received quite yet. And if the company's looking to buy the company or whatever, they want to know what their assets will be at the time, or what they will receive, rather than what they have at in that moment in time. So that's why accrual basis is the best, just due to the fact that they can see as a whole what the company is worth. So going back here from the example, we can see that, let's get this formatted first. So accrual, they started with $31,700. And then if we look down here, the company incurred operating expenses of $16,400. So we're going to go ahead and we're going to type in 16,400. Now this is the accrual part. So where it has all of the expenses paid out in cash and on account still, we don't need to look at those, because as a whole, the company is just recording what is happening as a whole. So where they recognize $31,700 in service revenue, and then they recognize that they are going to have $16,400 in expenses, they just recorded it right then. So if we want to take the total accrual basis of the company, we'll take $31,700 of service revenue, subtract the $16,400 of operating expenses, and that'll get us a grand total of $15,300 for the accrual basis for Blossom Company. Now on the cash basis, there's a few more steps to it. So just like on the accrual, we started with $31,700, but $6,700 of it was on account, outstanding at the end of the year. So because they haven't received that money yet, we're going to go ahead and subtract that. So that's $6,700, and then we'll get the total of those. So the revenue minus the accounts payable, or accounts receivable, sorry, and it'll be 25,000. So let's move that down actually one. So so $25,000 is what we're starting with. Now, like right here it says, of these expenses of the total $16,400, $12,220 was paid in cash. And so what we're going to do is, because that's a cash basis, since we're already going to be, we're going to have to pay that in cash right then, we're going to go ahead and subtract the $12,220 that were paid in cash. And then the $4,180 is owed at year end, but we already accounted for that up here in the accrual basis with the $16,400. So then if we go a little bit further into the question, it says that they prepaid, which is an asset. Prepaid insurance is an asset, and so they prepaid $2,390 that won't be used until the second year of operations. So once we take those numbers, we take the 25,000, you subtract the 12,000, and then you so the $25,000 for what we started with after the service revenue minus the accounts receivable, and then we have the $12,220 that were paid in cash for the expenses, and then the $2,390 for the insurance coverage. You come with a grand total of $10,390. So when you go to Wiley and you plug it in, the correct answer will be, for cash basis, $10,390, and the accrual basis will be $15,300. Now, with these, like we said at the very start, the best way to look at the company is the accrual basis, because as you can see right here, the accrual basis is worth more than the cash basis, just due to the fact that there are extra funds in the accrual basis that are just waiting to be received by the company. So that's the tutorial for the Chapter 4 Exercise 5. If you have any questions, just go ahead and post them in the discussion board, and I'll get back to you as soon as I can.